to, I guess, start to go through this. Before we get started, a couple of things. First thing is grab a pen and paper. You'll need it. I'm also going to grab one just because it's going to be a lot easier for me to write with you. All right. A little bit about this program. This program's free. It is designed for you to determine a true profitable labor rate. Most people who start in this business, most companies, they don't know where to start. They make it up. They go according to their competitors. Oh, my competitor's charging $85 an hour, so I'm going to do the same. And it's wrong. Um, a lot of times you're either too expensive and you don't get the job, or you're too cheap and you go out of business. One or the other. I developed a profitable pricing program. This is a program to determine your true labor rate. If this video is too long, I'm going to maybe divide it into two different videos, part one, part two, or even part one, two, three. All depends on how long it is. We have a lot of great information and it's going to be very valuable. Like I said, first thing, get a pen, get a paper, and follow along because there's a lot of math involved, a lot of numbers involved, and exciting. Let's go. So we're going to break this down into sections. The first section is adding up your costs properly. Many people never really go through their costs. So I'm going to ask a series of questions, and using these questions, you'll be able to determine, the answers, and you'll come up with your costs from there. So let's start. Um, Before anything, please subscribe to our YouTube channel. We're going to have tons of content like this. We're going to have, labor rates, flat rates, marketing advice, sales advice, management advice, processes, systems, manuals, handbooks. I mean, job descriptions, you name it, we're going to cover it. Follow us. You can go to interstateairalliance.com/YouTube. What is the Interstate Air Alliance? It's something that I'm trying to build. It's an alliance of HVAC contractors throughout the United States that all help each other. I'm trying to really eliminate those expensive groups that charge you know $30,000-$40,000 a year to get advice and processes and systems. We're going to try to get this done for free or a lot cheaper. Anyways, subscribe. You'll be glad you did, and you'll get crazy amounts of content for free. So let's start. First, um, what is your best technician's hourly pay? Now, if you're a company that has two guys on a truck, a tech and a helper, and you always have a tech and a helper, combine those rates. If you have four guys that are making $25 an hour and that one guy making $30 an hour, I want to use the best technician's hourly pay. So the way to go about this is I labeled everything. It's going to be A through Z. If you look over here, it's going to be A. So now on your piece of paper, I want you to take down, write A, and write the answer. That's going to be the easiest way to do it. At the end of each slide, I'm going to have my examples on the right side of the screen in the black with my answers. Of course, they're dummy answers. We don't use them for our business or anything, but just as an example. So, like I said, on your pen and paper, take down A and write a dollar amount. After you have that written down, we're going to go to B. Does your tech receive commissions, spiffs, bonuses? A lot of companies, that's the blood of their service department is commissions, spiffs, bonuses. So if it is, we need to calculate that amount in our labor rate. So if they receive, $500 a week on average, write down 500. So on that same piece of paper, write down B, put next to it the amount. If it's zero, leave zero. Now, what is your direct expense percentage? So what falls under a direct expense? Most direct expenses are here, they're direct costs that are associated with the tech's labor. So workers' comp, payroll tax, benefits, unemployment. Like I wrote over here, I like to overestimate in this section. just because I'd rather be over than under. It makes the most sense. So the main ones in our industry are really, you know, liability insurance, workers' comp, payroll, tax, medical benefits, and unemployment. If you have those, you should be covered. You should be okay. And other things that are, I know there's like borderline direct versus indirect, and we can cover that in another video, where we talk about gas and trucks and auto insurance. Um, for our labor rate, I'm not going to calculate that right now. That'll come later and you'll see. But for now, let's just talk direct expenses that are associated with that tech. This needs to be a percentage amount. So 20%, 30%, it's easy to add. So if you know that workers' comp is 10% of their salary and, insurance is 4% and payroll tax is, 5%, then you're at 19%. You just add it up. Now, very important over here. Many people, when they're calculating their labor rate, they don't realize how many days off we have in a year, which is a lot. So, D, how many paid vacation days do you offer? You offer 5 days, you offer 10 days. Write that down on your paper, have D, and write it down. The reason why I want you to label it A, B, C, and D is because later when we're doing our math calculations, it's going to be confusing if you don't have it labeled. So, label it. Let's move this. E, how many paid holidays do you offer? Everybody gives off paid holidays, so there's no reason why we shouldn't have that calculation when determining our labor rate. And last, how many paid sick days do you offer? I know many states have, mandatory sick days. I know people get 5 days. I know they're separate from vacation. However you do it, doesn't make a difference as long as these three, are added and we use them in our formula. Now, I'm going to show you my examples that I have up here. So let's just backtrack a little. For A, I have $35 an hour. I know that's on a little bit of a high side, but we're located in New York, so we're high. B, I put for a commission, my average is $500. C, my direct expenses are around 30%, a little less. I like to overestimate. And then for D, E, and F, I put 5 days vacation, 5 days holidays, 5 days sick, which seems like it's somewhat of a standard. If everybody got that, we'll move on to the next slide. If you didn't, and you didn't write it down and you were just listening, I'm telling you, start over, start the video over, get a pen, get a paper, and start writing this down. Now, how many hours do you bill a day? I know that, we all think we work at least 8 hours a day, but you definitely don't bill 8 hours a day. You're traveling to and from site to site, and unless your dispatching department is phenomenal and you have, millions of calls coming in that are geolocated in the right areas, you're going to have some downtime. So on G, write down how many hours do you bill a day. If you bill 6 hours out of 8, that's important. When you're calculating our labor rate, you can't calculate it on 8 hours when you're only billing 6. You're not going to get a true number. Also, we need our callback and warranty percentage. We all know in this business it sucks, but we're always doing callbacks, we're always doing warranties. So it's very important that we have that percentage. If you do $100,000 and 5,000 of it is, free callback warranty, that's 5%. Come up with a percentage and hopefully, be accurate. If you don't have it tracked, then try to be, as conservative as possible on the estimate because it's important. Yeah, so this is just giving you, a little bit of a description. This does not include overhead or any other stuff. This is just callback warranties, freebies. If you have to go to your Uncle Nick's house because he knows you do AC and you can't charge him, that's in that warranty / callback. Other than that, it's not there. Now for the overhead. I want a dollar amount for this. The total overhead for the service department. This is everything that's involved for your service department to run. So dispatcher, service manager, bookkeeper, admin, office admin, call center, customer service, trucks, gas, owner salary, insurance policies. Obviously, not ones that were covered in the direct expense when we came up with the percentage for the tech, but everything else. Once again, if you have any questions on any of this, just comment and I'll be very active. I'll answer. You could also join. We have a Facebook group called HVAC Alliance. It's a business owner networking Facebook group. You could ask all your questions. We'll answer. And hopefully, you're on the road to getting a professional, real business. So back to this, on the paper, take I, write it down. Is it 200 grand? Is it 300 grand? Is it 400,000? Only you know. If you have to estimate high and keep those numbers. Now we got to come up with a total technician count. So when we're doing our calculations, it's important to know exactly how many techs we have. Um, If somebody worked for 6 months, they're considered a half a tech. If somebody worked for 3 months, it's a quarter of a tech. If somebody works for a full year, it's one tech. So if somebody works 20 hours a week, that's a half a tech. So if you look, one technician employed full time for a full year equals 1.0 man years. One technician employed full time for 6 months equals a half a man year. This is just so that when we break down our numbers and calculate it by mechanic, by tech, the number will be accurate. Now, for my examples, move this over. Okay, so we bill a day in my business 6 hours. We have a 5% callback and warranty percentage. Um, for this sample, I put 250,000 service department overhead. Mine's more like 4 million, but we put 250,000 to make the numbers easy. And then for technician count, I just made it up. I went in 5.5 techs. That means that I had 5 techs that year and a tech that was here half the year. Now, it's also important to keep doing this. I would like to do this, I suggest doing this at least quarterly if you're a company that has, a lot of turnover, just so that your number could be as accurate as possible and your labor rate could be as accurate and as competitive as possible. But I put 5.5, write this all down, keep the slide here for a little, and I'll move to the next. Now, what type of profit are you looking for? Because in order to come up with your labor rate, you want to know how much profit you want to make on it. So really, it's up to you. You create your rate based off of what you want to make. This is also excluding, if you charge service calls, if you charge travel charge, diagnostic fees, and this is also excluding any parts or anything like that. This is just on labor. I say it's very healthy to stick to, a 15% fair, 15% profit after tax. Now we have to add the tax rates. Obviously, you got to pay Uncle Sam, so that should be in our labor rate. Let's pass it through. There's no reason we should only pay it. The customer should pay it. So L and M are top marginal state rate and the federal tax rate. If you don't know your state rate, go on Google, just type in your state tax rate and it'll come up the percentage. And for the federal tax rate, that goes according to salary. You can also go on Google, search federal tax rate and go from there. It'll give you a percentage. It'll have brackets. When you make X to Y, it's this. When you make Y to Z, it's that. Of course, you could also ask your accountant, but you could be able to Google it and come up with a pretty close number. Now, do you offer a discount for service agreement customers? I think you for sure should. That's a whole nother video, but you absolutely should. You should incentivize people to become a service agreement holder. And If you do, what is that percentage so that we can add that into our labor rate? My examples. So in this over here, we put 15% net profit after tax. I put 8% state tax rate, 22% federal tax rate, and then I put that my service agreement customers get a 10% discount. So this is K, L, M, and N. Write this down on your sheet. Now, section 2. Once we have all of these numbers written down, we got to start doing our calculations. With the exercise that we performed on section 1, a lot of times, you know these numbers, you even know them by heart, but you don't have them written down on a paper and you're not able to crunch them properly to get the proper calculations and the proper rates. I also have online available for purchase if you want. I made a document that does all the calculations for you. It's just asks you a list of questions and you fill them out and it pretty much gives you your labor rate. It gives you your hourly rate. It's also gives you a little section of where you can do this on a quarterly basis and then averages it out so you always know that you're on top of the game. If you're interested in that, you can just go to our site, Interstate Air Alliance / pricing program. That's pricing program. There'll also be a link down on the video if you want just to purchase it. You don't need to. You can do it yourself and still get your rates and be perfect from there. You don't need to buy it. It's just available if you were to want it. Now, once again, follow us on YouTube. It's interstateairalliance.com /YouTube. Subscribe. We're going to have tons of good information. And also join us on Facebook, HVAC Alliance. It's a no-brainer. Tons and tons and tons of free info, free forms, free everything. We run a $20 million AC company. You can get all that stuff for free. Let's go on to section 2, calculations. So step 1 is let's get our actual labor costs per hour. So before we do anything with, our days that we're working and hours that we're working, let's get our labor cost. So pretty much we got to break down our commissions by the hour because we did it before by the week. So O is going to be B, this is why I told you to write this stuff down, divided by 40. So you take B, you divide it by 40, which is a 40-hour work week, and you come up with your number. So example, in this example, our average commission is $500 a week, divided by 40 is $1,250. So now O is $1,250. So I want you to take that same document, that same piece of paper, write O next to it, and put your amount. Your amount is B divided by 40. Now we're going to come up with our average labor cost per hour, which is fairly simple. What it is we're going to take our top paid mechanic or top paid technician or team, if you send 2, which was our A, the first question of A, and we're going to add A plus O, which is the commission broken down by the hour. So now you're getting the commission broken down by the hour. You're adding it to your most expensive technician by the hour, right? So if you look at my example, my A was $35. My O was $1,250, which made $4,750, right? Now we're going to take my direct labor costs, which was my insurance, my workers' comp, my payroll insurance, all my stuff over there that I had in C, and I'm going to do the multiplication. So I'm going to do 1 plus C, so 1 plus 30% is 1.3, and I'm going to multiply the labor rate by the 1.3, which is my 4750 times 1.3 is 6175. So P is 6175. Can get confusing. That's why you need it all written down. So P equals, A plus O multiplied by 1 plus C, which brings my labor cost to 6175 per hour. You can see my examples here just to have it written down. Now, I suggest pausing. If you need more time, pause the video. It stays forever. You can pause it, write it down, crunch it up, look at my examples, use them, and go from there. Now that we have our labor cost per hour, we're going to have to get our labor cost per billable hour. This is a whole video in itself, but actual versus billable, like we said earlier, you pay your guys 8-hour days, they only bill out 6-hour days. It's not your problem to lose the 2 hours. So we're going to have to account for that in our rate. First, what you got to do, Q, is our available hours. So Q is 2080, which is what's 2080? I just did 40 hours a week times 52 weeks. So there's 2080 hours in a year that one could bill for, that one can get paid for. Now we minus D, E, and F, which is our vacation days, our sick days, our benefits that we give our employees. So D, E, and F by 8. So you take how many days that you give out, multiply that by 8 to get the hours, and then you minus those hours from the available hours in that year. So if you look at my example, in this formula, we take the amount of hours in a year using an 8-hour work week. That comes out to 2080, like I said. We now subtract the hours of vacation, holidays, and sick days. 1 second, let me get a charger over here so my computer doesn't die. Okay. So look at the formula that I did based on my numbers. 5 plus 5 plus 5 is 15. 15 times 8. You do 2080 minus this formula over here equals 1960. Cube 1960. We have 1960 billable hours in that year on an 8-hour day, excluding our other stuff. Now, for R, to get a little bit more to the point over here, we're going to break this down by per available hour. So now we had before our actual, let me go back. I got too excited over there. Okay, so we're going to break this labor cost per available hour. So before we said that our available hours are 1960. So R equals P divided by Q divided by 2080. So in this example, we need to do 1960 divided by 2080 is 0.94, which means we're actually working, the mechanic's actually working 0.94% of a year. So he's working 94% of that year because you're giving him 6% off. So when you take your labor rate from before, which is P, the 61.75, and you divide that, you come up with a number of 65.69 for R. So R is 65.69. Now we're going to get the percentage of, because we have 65.69, it's great, it's all fun and dandy, but that's still on an 8-hour workday. Yes, now that number, excludes the vacation time and the sick time and the benefits, but it's still on an 8-hour day. But our problem is we're only billing for 6. So what do we do here? We got to add those 6 hours into the formula. So S, and once again, get your pen, your paper, and keep this all written. S is G divided by 8. So G before was your hours that you work, or your billable hours in a day, which I put 6. So you do 6 divided by 8, which is a standard 8-hour workday, equals 75%. So we know that we bill 75% of the time. Simple, right? So once you get S as 75%, you're able, using R and S, get your number that you need of what it would cost you to bill 6 hours to cover the 8 hours. So that's T. T, we're going to get our labor cost per billable hour. So this is where we now apply the total daily cost by the actual 6 billable hours to get a proper number. This becomes the actual labor cost per hour you bill. So as long as you're billing this for 6 hours, you're covering your 8 hours. So T equals R divided by S. In this example, our labor cost per billable hour is 65.69. Divide that by S, which is 75%, equals 87.58. So T is 87.58. I know it can seem confusing. Pause the video. Pause it. Do what you got to do. Write it down. Pause it, or just buy the form that fills it all out for you and does it all for you, which I said you could find on interstateairlines.com/profit pricing. But anyways, so now T equals 87.58. Let me write this down. Okay, yeah, so 87.58. So now if you bill 87.58 for 6 hours in a day, you're covering your 8 hours. Oh, just so you can see, go back. Just so you can see my calculations if you wanted to. R is 65.69, S is 75%, T is 87.58. Now, break even. Many people don't even know what this is. A break-even number is the labor rate that you need in order to not make money and not lose money. This is where you break even. It's very important to know your break-even number to know where you're going to make money. So let's get our overhead cost per billable hour, which is U. This is the service department's overhead that we discussed before, the number that we gave. So the formula is I divided by J times Q times S. So go back to your sheet, look at what you put for J, Q, and S, and that's how you're going to get U. So in my example, U is 250,000. I'm sorry. So in my example, it's 250,000 is 5.5, which is the J, the man hours. Well, the how many guys we had in that year times the man hours, which is 1960, times 75% of the time, which is the S, equals 80.85. So that means 5.5 guys working 1,960 hours in a year, but only billing for 75% of that time comes out to 8,085 hours that are billable in a year. Now you just take your $250,000 number, which was the I that you had before. This is actually a mistake where it says the U over here on the top, it's I. So, and I'll fix that. So you take your 250,000 and you divide it by your 8,085 hours in a year. So now you get 3092. So U is 3092. That means my service department costs me $30.92 to run per billable hour, excluding labor. I know, crazy, right? You ever look at it like that, break it down like that? That covers gas, trucks, dispatchers, service managers, the billing clerks, customer service, office admin, after hours, covers everything in $30.92 per hour. That's you. For you, write down your number. Now V is, we're going to pretty much come up with the labor cost after the overhead, which is easy. It's T, which was your labor cost, plus U, which was your overhead cost, equals your labor cost after overhead. So in my example, T was 87.58, U was 30.92, total is 118.50. So 118.50 is my calculation of my labor cost after overhead. Now, how do we get our break-even cost? Our break-even cost is our labor cost after overhead, but we have to add in our warranties and our free calls and our callbacks that we go back to that we put before. So simple. The break-even cost is the labor cost after overhead divided by the 1 minus the percentage of the callbacks and the warranties. So in my example, I divide 118.50 by 0.95 because 1 minus 5% is 0.95, and it brings my break-even cost to 124.73. which is high. But in this example, 124.73, and I am not making money, not losing money. I am covering everything from the office to the insurance to the tech out the door for 6 hours, which means if I build for 7 hours that day, I win. It's a freebie because this calculation is taking an 8-hour day and using our billable average of 6 hours. My examples: U is 3092, V is 118.50, and W is 124.73. Good? Capiche? Next. Now we take our break even and we price for profit. So here's where we come up with our labor rate based off of our taxes and our desired net profit. Now you're going to end up pausing the slide like 10 times. It's confusing, a lot of calculations, but it's awesome. So let's talk our required operating profit before tax. This is the net income percent before tax that you must make to ensure you achieve your targeted net profit after tax. So because we know what we want to make as a net profit, we have to come up with what percentage we want to put on top of it to pay tax and make our net profit. So to do that, you use the following formula, which is confusing. So I broke it all down over here. Once again, you need your numbers, but for me, the numbers were below. I'm going to stay here for a minute because I want you to just review the math calculations. You're going to need to, do this with a pen and paper, or you can, like I said, buy the form that does it for you. It's up to you one way or another. Just go to interstateairalliance.com. It's interstateairalliance.com. Anyways, what we did was our required operating profit before tax was 20.71%, using the above formula. Just take all your numbers, your X, your K's, your L, your M, your L's, and you just do the math to get your percentage. Any questions, feel free to drop a comment. Once you have that percentage, you now come up with your service labor rates. Pretty much, Y is your service labor rate is W divided by 1 minus X. So you take all your numbers and you crunch it. So in this example, we take our break-even cost, divide it by our operating profit percentage to get our labor rate, which is our break-even cost was 124.73. We took the 1 minus our 20.71%, and we got a number of 0.79, so 79%. And then we just divided our break-even amount by our percentage that we need to add to it, and we got a number of 157.30. So my service labor rate is 157.30. Now, for some fun, might as well use this rate for your service agreement customers. Why should your other customers who aren't loyal and who aren't, married to you or aren't going to use or take advantage of your actual labor rate on your profit that you wanted? Make more on them. Why not? You can. So that's your labor rate. Now we have another one for Z, which is a labor rate for your non-agreement customers, which is just adding the discount that you give your agreement holders. You add that discount to the total and you get that number. This way they pay your true number and your non-agreement customers can, pay more. And then you can also use the discount to sell the agreement. I'm going to have a video on that later, using your discounts to sell additional products and services. So pretty much it's to get your labor rate for non-agreement customers, which is Z, it's your service labor rate divided by the percentage of a discount that you give. So in my example, my service labor rate for agreement customers was 157.30. My percentage that I give my other agreement holders is 10%. So 1 minus 10% is 90%. So I'm just dividing 157.30 by 90%, and I'm getting 174.77. So my labor rate to non-agreement customers is 174.77. These aren't real numbers. These are numbers that I just used to help you in your calculations. But you got it. I mean, here it is. If at any given time, I suggest that you pause the video, take your pen and paper, get the number, and work at it, work the worksheet. Like I also said, if you want to just, buy a worksheet that can do it for you, you can go to interstateairlines.com /profit pricing. But other than that, please subscribe to us on YouTube. Please join the Facebook group, HVAC Alliance. It's the business owner networking. Um, who's this for? I want mechanics looking to go off on their own, even mechanics doing side work, owners, whoever needs it. It's here, and I'm going to be posting all the time. Uh, please subscribe. Thank you, and I hope helps.